Hello, everybody. I'm Peter Grant with Zaner Metals in Denver, and this is This Week in Metals. My colleague from Chicago, Peter Thomas, is with me. How are you?
It's all good. Couldn't be better. Beautiful, beautiful day. And oh, by the way, for the last 3 weeks when we've been talking about this bullish rally coming and to watch out, well, it's here. You know?
Yeah.
Yeah.
It was a good week last week, huh?
Oh, wild, huh? Just
Yeah.
wild. I've got a couple shout outs, Pete, if you don't mind.
Go ahead, shoot. Who you got?
A lot of people ask me, hey, who are the best sources? Who has what going on? So I'm going to tell you right now, Yvonne Lee has just been made the head of the gold desk at Bloomberg. Without a doubt, Miss Lee is one of the hardest working, toughest researchers in gold. She's now head of the desk. Congratulations. Run that desk. She is a terrific gal. Only the best for her. So we wanted to shout out to her. The second one is the Silver Institute came out with just a fantastic report, and they're one of the few people that hands down I can rely on and quote. I know they do their homework. And then the last one was the Platinum Investment Council, which is out of London, sent me their kind of their monthly thing, and it was excellent. And Brandon Clifford and Trevor Raymond kind of run that, and they have been kind enough to invite me to be one of the few speakers to do a special about platinum palladium. I'm going to lean a little more towards platinum, I believe. Hopefully, we'll be able to get a special in with a slant towards production and the future of platinum and what it's going to be used for. And hopefully, our guys that follow us that want to buy platinum, that need platinum, that hedge platinum, will be able to come to us in the future after they see this, and they'll be able to see how it all fits together.
Yeah, back in pre-COVID days, that would probably mean an invite to London for you, wouldn't it?
Oh, yeah, unfortunately. And you know what? I've had some good times in London, but I'll tell you something. I would have preferred South Africa. I love it there, but
Yeah,
boy, that's a rough flight, man.
yeah,
Yeah. But
excellent.
hey, listen, I want to ask you something. What's going on in ETFs? Did you see what happened in gold last week? I was like,
So
whoa.
let's jump right into gold.
Yeah.
Gold ended the week up about 1.5%.
Right.
It was and comfortably back above $1,900. So we saw a pretty sharp sell off on Tuesday last week
Right.
when the president said no mas,
No
no
mas,
more
no money.
negotiation
Right.
with the House Democrats on stimulus. That pulled the rug out from under the stock market. Gold sold off, in sympathy as well. Um, but as is always the case, you know, the people started doing the calculation that no money now probably means more money later,
Yeah.
regardless of who wins the election.
Right. Yeah, yeah. That's a
And
valid
and
point.
and
Yeah.
it's a valid point. And
Yeah.
also, frequently when we have these walk away from the table moments with President Trump, it's a negotiation
It,
tactic.
the master
And
of the deal, correct, sir?
Well, if you're a real estate guy, I can't tell you, how many times I've walked away from a real estate deal or a car deal, just
Yeah.
turned my back and said, "Ah, that's no thanks," and they come running after you.
You're giving your secrets away, Pete.
Yeah,
They
yeah.
got you now. Okay.
Okay, we probably don't have any used car dealers or new car dealers on here, but you never know,
You never
right?
know. But
So,
but at any
yes.
rate, we saw the ETFs come in on the break with a vengeance and just buying with both hands. And I think is that 6 straight days?
I think it was 6 straight days through Thursday last
Okay.
week.
Yeah, yeah.
No, because yeah, even on Tuesday, even on the
Even on the
sell-off,
break,
they
they
were
were
they were
buying.
buying,
Yeah.
and so the World Gold Council came out
Ah,
with the 1,000-ton figure that there's been a
that's right. That's
thousand
right.
metric
That's very. Make
tons,
sure you repeat that. Say that number again.
1,000 metric tons of
1,000
new
metric
demand
tons of gold is now controlled by the
in
ETFs.
in the
What a
2020.
staggering number.
Yeah, no, that's just 2020. That is just
Right.
inflows in 2020.
Yeah.
Um, Refinitiv put it a different way. The
Okay.
first 3 quarters of 2020 resulted in more demand than all the demand in China for 2019, ex central bank buying.
Oh,
So
really?
the world's largest consumer of gold in the world is China,
Right.
and just the ETFs now account so far this year through the end of the third quarter accounted for more demand than all the demand in 2019, with the exception of central bank
Okay. So
demand.
the number is just
It's
just
a
gigantic.
whole lot of
And now
gold.
let's throw something else in here which you might not have seen, and I want our viewers to think about this too. As you know, at one point I was considered the largest taker and maker of deliveries in silver for a non-bank. So I know a little bit about deliveries. 62 tons of gold was delivered at the COMEX. If you could even imagine that, because October is what's referred to as a non-event for delivery, blew everybody out of their chairs. Nobody could even believe that number was taken off the table. And that's what we saw. So I'm saying to you, first off, largest number we've ever seen in an October. What's going to happen in December?
Ooh, that could be very interesting, right?
Yes, it could.
Yeah.
Could we run out of gold? Even though Switzerland has been flying it in as fast and as heavy as they can, but this is very interesting indeed.
Yeah, I think the remainder of the year stands to be pretty interesting. So
Yep.
I was very impressed with how the market ended last week.
Yeah.
Stimulus seems to be back on the table. Um, you know, uh, a couple of things to think about with respect to that. If they do somewhere between 1.6 and 2.2 trillion dollars of stimulus, that's
Right.
going to get the national debt pretty darn close to $30 trillion.
Now, what was your projection? Are we through your number?
No, the Fed balance sheet is still kind of hovering around 7 trillion, but I think there's
Okay.
room to, to go
Just checking,
higher.
you know. I
Yeah,
mean, I'm not buying that steak until I see that number.
yeah. So the expectation for 2020 GDP is going to be probably just under $20 trillion. So if you
Okay.
think 30 trillion debt, GDP 20 trillion, that's
Right.
150% debt to GDP ratio. That doesn't sound very healthy.
A
In
mere
fact,
bag of shells, to quote a friend of mine.
yeah, in fact, the World Bank, says that whenever a country gets above like 77% debt to
Right.
GDP ratio, there's cause for concern. So we're approaching double that. And admittedly, we have a little bit of what Mr. Mitterrand called the exorbitant privilege. Um, but
Ah, the
still,
French, huh?
yeah, that's
Yeah.
still a little bit troubling. So if you're
Yep.
all out there still looking for a reason to buy gold, a 30, we're in excess of $27 trillion in debt right
Right.
now.
That
Um,
would fuel the fire.
yeah, so
Absolutely.
30 trillion is you know, that's going to be
Big number.
a tailwind for the gold market, I think.
All right. Now,
So
Pete, I got one more shout out to do in the silver, if you don't mind.
go ahead.
My friend John Perez from the CEO of Comstock Mining sent me the sheets from the United States Mint. As you know, I know John Ryder. He and I spoke not long ago, and he's a very nice man. And he just came up with an illuminating idea that maybe we should charge incrementally for the silver coins in regards to the price going up. There's quite a concept, huh? If silver costs more and we made a coin and we paid 17 for it and it's now at 22, we could raise the price of the coin to the current ratios so that the US Mint would be profitable. And it's nice to see some fresh blood in there. I think this is great. And thank you, John, for sending me that, because I hadn't seen Jim was doing that. And last year, he and I talked about doing live feeds going into the U.S. Mint from us, so that they would be all the time be up to speed on what was going on, and it looks like they're paying some dividends.
Nice.
Yeah,
Nice.
yeah.
That would be nice, to have the U.S. Mint with the tornado feed.
Wouldn't it though?
Yeah.
And you know what? It's a perfect fit. I
Right.
and we could do all kinds of automated hedging for them so that they would never have price mitigation risk, which would really make them profitable.
Yeah. So I mean that's something that we offer to anybody in the industry. I
Right.
mean we have one of the best feeds in the industry,
Hands down.
because it drives, it's the same pricing that drives our hedging engine,
Right.
and so it's very accurate pricing, very narrow spreads, bid and ask. So if
Yep.
anybody wants a live feed of the precious metals, give us a call.
Give us a
We'll,
call
we'll, we'll help you out.
and then compare it to all the other folks where you're paying for.
Yeah,
You're in for a very pleasant surprise.
yeah, exactly. So
Uh,
silver
yeah,
was up 6% last week.
big rally,
Um,
big rally
it,
today. Tell them about this afternoon.
yeah, so on Friday, the silver market came back with a vengeance.
Yeah,
Closed
baby.
back above $25. So that's the first time since September 21st. So a couple of weeks,
Yep,
and market again looks really strong. I was a little bit concerned about the chart formation
you were
when we talked
last week.
last week,
Yeah,
and that seems to have kind of blown it out of the water. My concerns have been mitigated by
right.
that close back above
Well, if
25
you remember,
bucks.
you asked me, where do we stand? And 2 weeks ago, you and I are both bullish to silver, even though it was getting a little choppy. And I said, hey, I'm still bullish. We're going to see some higher numbers, and bang, we did. So
Renewed weakness in the ratio is what makes things easier for me all the time. So the ratio broke
yeah,
through support at 78,
right.
and is looking weak, and looking like the overall downtrend in the ratio is reexerting itself at this point,
Yep.
and that
Which means we'll be
bodes
going
well for
higher,
silver.
folks. That's what he's
Yeah,
saying.
yeah, and
And
and gold as well.
yeah,
So, but I just like when silver, the higher beta metal, leads in the in that
on the
market.
intermarket gold silver spread. Yeah, I
Yeah,
got you.
yeah. So
Listen,
that's pretty good.
put your spurs on, climb on that Brahma bull because tell me Palladium saw 2450 and I will have my eyes pop right out on his screen, right?
Right. Yeah. So and then some. It actually set a seven month high at 2474. Broke through all the important resistance
Yes,
levels.
it did. And
Um,
2450, boys and girls, was the big number. All of our scrappers out there, pay attention. Give us a call. It's time to start talking about getting rid of some of your product. Let's get it hedged up on Tornado. Just letting you know now,
yeah.
here's your opportunity. You're close to $2,500. You've been picking this product up a lot cheaper. Make some money now.
Yeah, so up almost 6% last week,
Right.
2.3% on Friday alone. And at one point in the day when it was trading at that high, it was up nearly 4% on the day. So my next technical level is 2580 on the upside. That's
Whew,
78.6% retracement of the March
amazing.
shellacking, if you
Yeah.
recall.
Oh, I recall too well. That was
Yeah,
a bloody mess along with Copper. Copper looked like one of those Wile E. Coyote Roadrunner cartoons where he's holding the anvil going off the cliff.
right.
Right. That was ugly. But now let's think about this, guys. If you're holding platinum, palladium, autocats, if you're refining, if you're collecting jewelry, any to all of our guys, T-bills are paying point 0.2. If you're picking up 11% in 7.5 days, I want you to think about this, put that thinking cap on and go, whoa, maybe it's not a bad idea to ring the bell a little bit here. It's
Yeah,
only been 7 days, I mean, it's just me, okay?
right. So platinum was up a little bit over 1% last
Right.
week. It was the
Platinum was
second
dragging
higher
behind
weekly
again.
close.
Yeah,
Continues to struggle above $900. I mean the platinum palladium ratio is really stretching out at this point,
it
and
really is.
so platinum might be appealing from a kind of an investment perspective. Uh,
We're
because
seeing
I
a
do
lot
think
of
it's going to
platinum
drag higher.
going into the ETFs, but we're not seeing jewelry, the jewelry consumption for platinum has been miserable. So it's a tough call right now. I'm going to cover it in depth next week, but right now, I have to agree with Pete. Technically speaking, doesn't look too good.
Yeah. And just to backtrack to gold, because the point you made about jewelry
Right.
is an important one.
Sure
You
is.
know, when you talk about that ETF demand in gold, I mean, it
Right.
becomes really obvious why gold has performed so well, even with the absence of physical buying in Asia, China and India
In India.
specifically.
Well, we talked last week in length, guys, if you didn't catch it, about the wedding season, about the monsoons, the weather, what's driving that, the COVID and how it affected jewelry in India. They were the number one buyer for many, many years. So if you want to catch up on that, just go to the YouTube and look us up for last week.
Right. But I'll tell you, I've said this before, and I'll say it again. When China and India do come back,
Oh,
this thing is going to be off to the races,
it's going to be fun. Yeah, you're 100% right.
and they will be back. I
Oh yeah,
promise you.
oh yeah, and and look at, we had the dollar get hammered again, and as long as the dollar keeps drifting down, guys, there's going to be support across the board here in these metals, and I
Yeah.
mean base metals as well. We're seeing nickel, steel, all the commodities like we talked about 2 months ago are definitely still a buy in my mind.
Yeah, and again, the dollar was something that we mentioned last week, and I said
Right,
I wasn't impressed with the dollar rally. It was only a little bit over
it's
3%
true.
from low to high,
That's true. Yeah,
and everybody's going like, "Oh my gosh, gold and silver are done. The dollar is bottomed," and I'm like,
yeah.
"Oh, it's not even technically a bullish correction, like not
Right.
even close."
Not even a move, really.
And
Yeah.
more than half, more than 50% of that 3% rally has already been retraced.
Yep.
And Friday, the dollar took a pretty strong hit.
Yeah,
So
it did.
so I'm not worried about dollar strength. I think
Okay.
it behooves the Fed to keep the dollar weak. Certainly, it
Yes, it does.
behooves the
And they're
fiscal
willing,
powers.
to do it too, which is really more important.
Yeah,
They, in the minutes they said, "Hey, we're okay." As a matter of fact, in the minutes they said we're okay with even a higher inflation ratio than we have, which kind of surprised. What I was like, wow, I mean, I found that very interesting. So,
yeah, yeah. And
let me
here's
ask
the
you
thing.
something,
Here's
Pete.
the thing,
What do you
though.
think of copper right here?
Let's go back to the FOMC and after we talk about copper, because
Sure.
I do want to put in my 2 cents on that.
Okay.
Copper closed up 3.5% last week.
Yeah.
So again, most of the corrective pullback has been retraced.
Yes, it has.
Very strong performance on Friday specifically, and I continue to like it. So
We have, all right, we have, remember, for the last 3 weeks, they've been talking strike in Peru. We got confirmation. They did walk out. Mexico and Chile. Chile is officially on strike. So we only really have one more mine left, and they shut that one down. And there we go. We are going to have no refiners. What we refer to as unrefined ore will be coming to the market. That's a big deal, folks.
that is a big
This
deal.
this 307, 308 number that Pete has showed you on charts many, many times, technically, you know, his number 6 months ago was 330, and I still believe we can get there.
Yeah, I think so too. Particularly if the global economic conditions continue to improve, the demand for copper is going to be there, and if the strikes in South America continue,
Yeah.
that's going to put a crimp on supply,
Oh
obviously,
yeah.
and again,
And
basic
it goes right to
econ.
our scrappers, guys. Keep those wheels rolling. Keep that
Yeah,
wire coming. We need you guys.
righto.
So let go, if you would go over some numbers for us for next week, Pete.
Yeah, just to review a little bit,
Yeah.
just to kind of put a point on the economic recovery. On
Right.
Friday, Canadian the employment data for Canada came out way better than expected. It was sort of our equivalent of the July numbers, I guess.
Uh-huh.
Plus 378,000 jobs. Market expectations were plus 156.6, 156,000. And that's coming off of 245.8 thousand in August. So the unemployment rate in Canada dropped from 10.2 to 9%. And so again, I think that provided a little kick in the pants in the commodities market as well. We continue to see pretty decent numbers for here in the U.S., but that was a big plus for Canada.
Well,
Um,
we gotta remember Canada provides so much. I mean, they are our the Canadian the trade agreement was signed, and the borders have opened. We're moving and we're buying a lot of lumber from them for one of our biggest housing building booms in our history. We buy ore, we buy metal, we buy nickel, we buy rare earths. I mean, we do a lot of trade with Canada in our corner of the world.
Yeah, absolutely.
Yep.
So yeah, so last week again, pretty decent numbers. Initial jobless claims came in at 840, which was below expectations. That's always good. That
Yep.
trend is still down, although it's slowed, considerably, but it's still headed in the right direction.
You bet.
Wholesale sales on Friday came in better than expected, plus 1.4 on expectations of 1%. Um, this coming week here, we've got inflation. So CPI, PPI, import export prices, modest upticks across the
Right.
board, plus 0.2, plus 0.3 is what the market's looking for. And that kind of circles us back around to the FOMC minutes that came out. And the as you said, they're inclined to let inflation run hot if they can get it there. And so they're thinking that we might be running above 2% by 2023.
Okay.
So so I
Okay.
don't think
So,
it's
we
an
got a
immediate
couple of
concern.
years yet, and you know what? We need a couple of years to recover from COVID. So
Right.
that's fine by me.
Yeah. And so most of the participants in the FOMC meeting still viewed um, the COVID crisis as deflationary, and that comes as no surprise. But it's important to remember that gold, while everybody knows that it's sort of the classic hedge against inflation, it is also the classic hedge against deflation and disinflation. And
People tend
you,
to forget that
yeah,
because remember, gold falls slowly versus versus fiat currencies, which will drop very, very rapidly. And gold will tend to deflate just a little bit slower. So in effect, you're losing less, but you're still losing, but you're losing less. It's a strange scenario which they don't teach in college anymore.
Yeah, but the two biggest deflationary periods in recent memory, the Great Depression
Great
and
Depression. Yeah.
the financial crisis from 2008 to
Eight.
2010,
Yep.
um, were uh, huge disinflationary events, and gold surged in both of those. So if we're in for more
As we
deflation,
say, as it's referred to, Pete, correct? It is the safe harbor. People
exactly.
flee to gold in the storm, and that has not changed at all, and it will not change. And Zaner Precious Metals, our site is up, and anytime you want to buy some metal, punch the button because we don't send you a 6 or 8 week pledge. It gets shipped out that week.
Right. And so, well, it depends on how you make your payment, but we
Oh,
do personal check. It's going to be
old
a little
money
bit
thing gets
longer.
in the way, huh?
Yeah, we got to have clear funds before we ship. That's the only rule.
Gotcha, gotcha.
Yeah. So also this week, retail sales on Friday. Expectations are plus 0.7%.
Right.
Industrial production also on Friday plus 0.7. So we still
It's not bad.
good numbers. Yeah,
Yeah,
not bad.
yeah.
So with that,
I
I
think
think
I
it's a wrap, my friend.
I think so too. I think we're looking forward to next week. And please dial us in. Pete, are you going to do your midweek recap again?
Absolutely. The Grant on
Outstanding.
Gold newsletter comes out on Wednesdays,
Wednesday, yeah.
and you can go to my Twitter account, Grant on Gold, and you can find the link
Dial it there.
to get onto the mail
Terrific,
email list
because
for that.
last week we got a lot of hits on, a lot of people liked, because there was so much going on, they liked your recap. So I want
Yeah,
to make sure people know that's available.
awesome. Thanks for that.
Yeah, you bet.
Appreciate it.
Yeah.
All right. Well, I'm Peter Grant with Zaner Metals in Denver. You guys have a great trading week.
Pete Thomas on the edge of the trading floor here in Chicago.